right, welcome everyone. I hope you're doing well. Hope you're having a good December. I can't believe we're almost halfway through it. Jeff Gibby here. I'm going to just basically be doing the introduction, and let's go ahead and get underway. I know your favorite part is this one, so we won't waste any time. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. It's my favorite part as well. Vince, I'm not sure you're familiar with Vince. This is his first time in the MetaStock webinar classroom. Scott, yes, I am recording the class. We've been working with Vince, I don't know, since just shortly before Thanksgiving. I've been aware of him. He's got some really interesting strategies that we're working on for MetaStock, and we're excited about it, as we always are. And he's somebody that's got a very, very disciplined and successful approach to the market, which is why we've brought him in here. And so with that being said, I'm going to basically go ahead and stop sharing this screen so Vince can set up his screen share. But I'm going to let him come in here and kind of start to give his class today.
That was great. Thanks, Jeff.
All right. Anything you'd like to add or kind of talk about yourself for a minute?
No, just that, I mean, I myself have been in the markets for almost 3 decades, and we have a great staff here at Trading Winds. And what we like more than anything is to keep things very simple. So what you're going to see today is a simple system anyone can trade with. We find simple is best when it comes to technical analysis. That's what we do, so that's what we'd like to show you today.
All right, I'm going to let you take it from here. Thanks, Vince.
Okay, thanks again, Jeff, and welcome everybody. Glad to be here with you. Now, this is our power momentum system, and I've got about 10 slides for you today. That's about it. Then I'm going to switch to my MetaStock platform and spend the rest of the presentation on there. A bit about us here at Trading Winds. We are a group of pro traders with well over 30 years of experience. We're actually real traders and real teachers, and we've been developing our own strategies and trading systems for many years and teaching people around the globe from complete beginners to experts. Okay, now in today's presentation, I'm going to be sharing with you the money management rules that myself and the other traders here at Trading Winds use on a very regular basis. And I'm going to tell you exactly what you're going to need to trade this system. I'm going to show you the setup, and I've called it here my favorite trade setup because it is. This is my favorite trade setup. And then I'm going to switch to my live charts. And it's at this point in the presentation where, after I show you a few examples of the setup, I will ask you if there is a symbol that you prefer to trade or you might be in right now. You can type into your chat, and I'll bring up the chart and we can analyze it together, okay? And then, time permitting, we will answer all your questions. A couple of poll questions first, just so I get to know who my audience is, so that I can tailor examples that are relevant to you. If you don't mind answering, please tell me which market you do prefer to trade most. Is it stocks, options, futures, or forex? Just take a few seconds. Please type it into your chat. I'm just going to take a sip of my drink here. Okay, great. We see quite a mix, actually. A few options, stocks, futures. I'd say mostly stocks and options, though. That's great. Thank you very much. And just one more question before we get started. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? 51 to 100, 100 plus. Please, again, take a few seconds and type that into your chat for me. Excellent. I see several responses. Thank you so much That's awesome. Okay. So trading can be very risky, again, if you don't know what you're doing. You really must educate yourself before you enter into this business with real money. So please, if you're just starting out, don't trade with your mortgage money or your kids' tuition funds. Arm yourself with the proper education before you risk any money. Now, let's get into this. As far as our money management rules here at Trading Winds go, these are rules we have been following for many, many years, and they have served us very well. Number one, I'm sure you've heard this over and over again. Really doesn't matter how many times you've heard it, but it is so relevant. Do not trade with money you can't afford to lose. Also, the whole point here is to trade with an amount small enough that it feels completely insignificant to you. The reason being, trading is so much more about how you manage a trade once you're in it than it is about selecting an entry point. Okay, and whether the amount you're trading with is a few $100s or several thousand, the amount doesn't matter. What matters is that it feels completely insignificant to you, so that once you're in that trade, you're able to think rationally, remain calm, and manage the trade appropriately. Also, never risk more than 5% of your account balance in any one trade. And if you have a larger account, you can reduce this to 2.5%, even 2%. You'll still have a very sizable trade on, but you'll be reducing your risk substantially. Also, never have more than 50% of your account balance active at any time in the market. Now, excuse me, some of you may be thinking, wow, I'm going to leave half my account just sitting there doing nothing. The purpose of this is that, number one, there are so many factors when it comes to the markets that are completely out of our control. Okay? And on a whim, any news announcement, any catastrophic event can really drive the market against us in a hurry. So number one, you want to use this rule to reduce your loss should one of those events happen. But secondly, if such a loss occurs, you want to have money there that you can then put back into the market and make back your losses. And with the system I'm going to show you today, it wouldn't take you very long to do that. Okay. Also, never place more than 2 trades per day if you're trading on daily charts. Reason being is during periods of increased volatility, as we saw last month, it's not uncommon to see, say, the Dow Jones up 300 points in a day, the S&P 500 up 30, etc. And on a day like that, you will get many setups to the long side. If you jump in and put 10 trades on, and the very next day the market retraces, you're going to find yourself in a big hole immediately. So what you want to do is be very selective and pick the 1 or 2 best trades per evening and spread your trades out. Okay? A couple other rules or goals we have here. Number one is you will never go broke taking profits, especially if you're just starting out. You want to get used to banking those profits. As you gain experience in the markets, you will learn how to stay in a trade longer and longer and squeeze out every ounce of profit. But if you're just starting out, you really do want to bank those profits when you have them. And also remember, when you sit down to trade, leave your ego at the door. This is not about whether you're right or wrong. That's important, but it is all about how much money you make when you're right versus how much money you make when you're wrong. Okay? Now, what will you need to trade the system? Number one, this can be used on just about any charting platform. We are using MetaStock. We love MetaStock. Great platform. And the reason being, all you need is a 20-period simple moving average on your chart. That's it. That's the only indicator you will be plotting on there. And really, you don't even need it. This is more of a visual aid than anything. But I'll show you and explain on the live charts why we use this indicator. So there is no need to go out and spend money on new hardware or complicated charting software. If you're viewing this webinar, you already have everything you need. Now, here are a few benefits of the system before I show you the actual setup. Number one, it will work on any market, be it stock, option, futures, or Forex. Globally, any time frame, any price level. This has been tested over many years, back tested, forward tested with real money, and it is consistent. consistently profitable. Also, any trader or investor, any level of experience can use this. It is that simple. You'll see how easy it is to spot a trade setup on a chart. Okay, it has very clear entry and exit points, and it can be used as a standalone system or as a great complement to whatever system you're trading with now. Now, a bit of background on the strategy. Give me one sec to take a sip of my water. Excuse me. Okay, when we sat down to develop this strategy, there were 5 main things we were looking for, or we thought we couldn't live without. Number 1, it had to be very simple and quick to spot on a chart, which we've accomplished. Number 2, it could be used with any platform. It had to be easy enough for just about anyone to use. And more importantly, it had to have extremely low risk. And when I show you the setup, you'll understand just how low the risk is with this strategy. And most importantly, had to be consistently profitable. And again, it has been for many years. Okay? Now, the only components involved here are, again, the 20-period simple moving average and engulfing candlestick pattern. Now, many of you may be aware of an engulfing candlestick pattern. I'm going to show you exactly how we use it and when we use it. That is the key. For those of you just starting out who might not be familiar with these, let me just explain. Simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods, just a straight average. And the engulfing pattern is a reversal pattern, and it can be bearish or bullish depending on whether it appears at the end of a downtrend, which is a bullish engulfing pattern, or at the end of an uptrend, which is a bearish engulfing pattern. Okay? Now, rather than try to explain it off this photo here, let me bring up my MetaStock platform and actually draw this out for you. Okay? All right, so here we have, excuse me, a chart of the Qs, the QQQ. But before we look at taking any trade, there's a couple things we look for with this system, okay? And that is trend and momentum. So we want to trade with trend and momentum on our side. When you do that, you've already won half the battle, okay? And let me show you how we read this. So number 1, this is in a nice steady uptrend, but how do we gauge momentum? This is how we do it. Right? We look at the slope of the bars as well as the moving average. Now this is where I said the 20-period moving average is used more of a visual aid than anything. This is why, okay? Because really you want to look at the slope of the bars, okay, to gauge momentum. You want to look at that slope, okay? Now, when it comes to momentum, you can have slight momentum in your favor, okay? You can have more significant momentum in your favor, all right? Or you can have very significant momentum in your favor. The more significant that slope, the better. That's what you're looking for. And it works exactly the same way in a downtrend. You can have slight momentum in your favor, okay? You can have more significant momentum in your favor. Or you can have very significant momentum in your favor. And again, the more significant that slope, the better. So once you have trend and you have that momentum, that slope in your favor, what you're looking for is a reversal or a pullback, okay? And and it's at that point that you'll be looking for a reversal pattern. So here we have that slope, and the reason why we want to look or use the 20-period moving average here as this visual aid is for this reason. If we look at the slope of the bars and then during the pullback or consolidation phase, okay, the slope downward on the bars can be very significant sometimes. So we could mistake that for downward momentum. But as you see in this case, the 20-period moving average throughout this pullback, it maintains that slope upward. So what that tells us is this is merely a retracement or a pullback before a continuation of this trend. That's why the 20 period moving average comes in so handy here. So this is what we're looking for. We're looking for that slope, and we're looking for a pullback here or a consolidation. And as long as that momentum on the 20 is still there, then we're looking for a reversal pattern. And the reversal pattern we're looking for, excuse me, is the bullish engulfing pattern, which in this case happens to be right here. And I'll zoom in for you in a second, but that's it right there. Okay, so the way you want to look at this, there's two different things here. There's a trade setup and there is a trade trigger. Okay, so for the setup, all we're looking for is you see the body here of the green candle, and I'm going to zoom in here for you if I can. Just give me a moment. Just give me 1 second here. Okay. Okay, I can't seem to do it. Just give me a second. I have something. I'm sorry, I'm being told people are having trouble hearing me, that the volume is low. I'll try to speak up. If that's better, please type it in your chat if that's any better for you. It's better? Yes? Okay. So then I will speak up throughout. Sorry about that. Wasn't aware of that. So let me start again. The setup, there's a difference between the trade setup and the trade trigger. For the trade setup, all you want to look at is the bodies of the candles, okay? The bodies of the candles, not the wicks or the tails, okay? When you have a situation like this where the candle on the right, the body of the candle on the right, completely engulfs the body of the candle to the left, that is an engulfing pattern, okay? So at the end of a downtrend here, meaning this retracement, this pullback, at the end of this, you get this bullish engulfing pattern here. That is your reversal signal. What that's telling you is that that retracement is over, okay? And the bullish momentum is going to continue to the upside. Okay? Now, for the trigger to get in the trade, what you want to look for is a trade above the absolute high of the actual engulfing bar, okay? Including the wicks or the tails, okay? Here. So the absolute high of this engulfing candle was 93.45. So you need a trade of at least 93.46 or higher to get you in that trade. If you get that, you take a long position. Your stop loss would go just below the low of that engulfing bar. The absolute low there is 92.48. Okay, so it's just about $1 range on that candle, and that is all the risk you'd be taking. Okay, be taking a $1 risk on that position. That's why I said earlier that this system has very low risk. Okay, now there's a couple other things as I go through these examples that I want you to notice. Okay, number one is whenever we do get a valid trigger and we enter a position, more often than not, it tends to move in our favor immediately. And that is important for a number of reasons. Number one, it'll not only give you confidence in the system, but also in yourself as a trader, which is huge. Number two, it helps you relax and manage that trade appropriately. Remember what I said earlier, if you're worried about the amount of money you have in there, or you're worried about your position, it's going to be difficult for you to stay disciplined and follow your rules of managing that position. But if it goes in your favor and you're in profit immediately, it really helps with that. Also, I noticed earlier that a number of you prefer to trade options. Well, it's especially important for option traders that it moves in your favor right away. As you know, if you get into a position and it goes against you, okay, an option position, then for you to recover that lost premium, requires a much bigger move to the upside than it originally had to, had it gone in your favor right away. So it's extremely important. Okay. Now let me show you another example here, but to the short side. Okay. Oh. This is a chart of CA. Okay. Now another thing you're going to notice with this is that when you have a sustained trend in one direction or the other, it really doesn't matter. But when you do, you oftentimes get multiple opportunities to enter along that trend with this system. Okay, so the first one here, you can see that the stock was just starting to trend lower. Okay, here, so the momentum, if we measure the momentum on the 20-period moving average, it wasn't that significant yet. Okay, if we measured on the bars, okay, then it was much more significant at that point. You can see it there. Okay, then we get a nice orderly pullback here, and again, it doesn't matter how far it pulls back. It can stay below the 20, it can be on the 20, or it can go beyond the 20. What's important when it does retrace is that the slope of the 20 remains intact. Okay, if the 20 starts flattening out, then you no longer have strong momentum on your side, and you don't want to take that trade. Okay, now I wanted to show you this example here because remember what I said earlier about the range of that engulfing bar. Okay, that's your risk. So when you get a very large engulfing bar such as this, okay, you need to assess your risk, and that might be too much risk for most people. And that's where you want to be selective. You don't want to force yourself into a trade. Just sit and wait. Don't take that, and oftentimes you'll get another opportunity. And here, about a week and a half later, we had another situation where the stock dropped, pulled back, and we got another engulfing pattern. So to review the rules for the bearish engulfing setup, remember that for the setup, you're not interested in the tails or the wicks of the candles. You're only looking at the body. Okay, and so it's the exact same setup as to the long side, meaning the body of the candle to the right must completely engulf the smaller body of the candle to the left. Okay, now once you have that situation, you're then looking for a trade below the low, the absolute low, including that tail or the wick there of the engulfing bar, to get you in short. Okay, if you get in short, your stop will go just above the high of that engulfing bar, again risking only the range of that one bar. So in this case, you'll see how much smaller the risk would have been on this trade versus that trade. Okay, so and then again, a couple weeks later, another opportunity here to enter short. Again, you can see that more often than not, it tends to move in our favor immediately. Now there's another important point that I haven't told you about yet, and that is that most of the trades that don't work out in our favor are actually not losing trades. Okay? They're simply negated or disqualified trades. And let me show you with my next example here. Here's a chart of Baidu. There it is. Okay, and we have a valid setup to the long side here. Okay, I'm going to just review this one more time. What are we looking for? We're looking for trend and momentum. Okay, momentum, we judge it by the slope. Number one, the slope of the bars. Okay, which you see there. Number two, our 20-period moving average, our visual aid here. Okay, so once you have that in place, you then wait for a pullback. Here it is. Okay, and then here you're looking for that reversal pattern, and as long as that 20-period moving average is still sloping, okay, that slope is still intact, then this reversal pattern is telling you that this retracement is over and that the move is going to continue higher. Remember, the setup, you're only looking at the bodies of the candles. Okay, for the trigger, you're taking the absolute high or low. So in this case, and this is another great example Um, I often get asked about the colors of the candles. So the bullish engulfing candle here must be green, okay, or whatever color you use to specify an up candle, because you ultimately would like this to close as close to its highs of the day as possible. The closer it closes to its highs, the stronger the setup, okay? And so this must be a bullish candle. The previous candle can be any color. It can be bearish, it can be bullish, it really doesn't matter, okay? What matters is the engulfing bar. And on a short setup, that engulfing bar must be red, okay, or bearish. Because again, you want it to close as close to its lows of the day as possible, okay? Then again, the trigger, in this case being a long trade, you want to wait for a trade above the absolute high of that candle. If you get in long, your stop goes just below the low of that same candle. So you're only risking the range of that bar, and as you can see again, off it goes, okay? Let me show you a couple more examples here. Here's a chart of Nike, and you can see a very clear example here. Again, what do we have? What are we looking for? We're looking for momentum, okay, or that slope higher. Now, this was off a gap, okay, but you can see the move, then a nice orderly pullback, okay, and again, the distance of that pullback doesn't matter. You can see in this case, the price bar is actually moved below the moving average. But look at the slope of the moving average, still pointing significantly higher. And you get a very clear, let me zoom in for you, there we go. You can see a very clear bullish engulfing setup. Look at the body here of this candle versus the small body here, okay? Now, I should tell you that if the body of the candle to the left was at the exact same level as the body here at the bottom or at the top, that's fine too, as long as it doesn't exceed it, okay? It can be at the exact same level, but it can't exceed it. And then once we have that set up, the very next day or the very next candle, we're looking for a trade above the absolute high of this engulfing bar. We get it, put our stop just below the low, and off we go. You can see how easy it would have been to manage this trade. I mean, not only did it go in our favor, it just continued higher. And actually, look at what we have today on Nike. We have another valid bullish engulfing setup, okay? So tomorrow, now it didn't close, very close to its highs, but it's still a valid bullish engulfing setup. So what we'd be looking for tomorrow on Nike is, again, a trade above the absolute high of this engulfing bar. If we get it, stop goes just below the low of the engulfing bar. Not below the low of this bar, but below the low of the engulfing bar, okay? And then it's just a matter of managing that trade. Let me show you a couple more examples, and I'm going to show you an example of a trade that did not work out in our favor and was actually a negated trade or a disqualified trade. Actually, let me zoom in and focus on this here if I can. Okay, there we go. So let's see. All right, so you can see here, this trade here. Now, because I zoomed in, we lost the slope, okay? But we had a slope here lower, okay? And same thing on the bars, okay? You had a nice slope lower, and then you get a nice pullback, a nice orderly pullback here. And it's right in this area where we get a nice bearish engulfing setup. So you can see the body of this completely engulfs this body. So what we'd be looking for a trigger here for a short trade is a trade below the absolute low of this engulfing bar. But instead, the very next day, it trades above the high of that bar first, okay? That means the trade's disqualified. It's negated. We no longer have a valid setup. Okay? This, I can't tell you how many losses this will avoid for you. Okay? This one rule. It will avoid the majority of your losses with this setup. Okay? So very, very important. And even if, let's say the market's open first thing in the morning, okay? They move above the high, then they turn around and it starts to dive and breaches that low. That doesn't mean you get in. The second it clips the high first, the trade's disqualified. Same thing for a long trade. Let me show you another one here. Okay. So here's a setup on Southwest Airlines to the long side. Okay. If this candle here had moved below the low first instead of the high, the trade would have been negated. Since it moved above the high first, then we're in. We get in long, stop goes just below the low. And you can see how, oops, all right, let me zoom out again for you. There's the trade. You can see how well that worked out. Again, how easy would that be to manage, right? Very simple. You wouldn't sweat that at all. Now, as I mentioned earlier, this works just as well on futures contracts, on Forex pairs, any time frame, any market. And let me show you a chart of gold here. And see just how well this works. You can see right in here, there is, here's your bearish engulfing pattern right there, okay? And off it goes. Okay? It really doesn't matter. And remember, if you're switching from one to the other, nothing changes, okay? You have the 20-period moving average on your chart, nothing else. Let's look at a chart of crude oil. We all know just how badly it's been getting beat up lately, okay? Let's look at how we would have done on crude oil here. So let's have a look here. Where's our first entry on crude? Let's see, well, there's one right here. Okay, there's a very nice one right there. Okay, now you can see in this example, maybe I should try to zoom in a bit for you. Okay, there we go. You can see that the very next candle did not breach the low. Okay, it actually took a second candle here to breach that low. All right, so this is another question I get asked quite often, and I would only wait for 2 candles, nothing more than that. In other words, if after 2 trading sessions, the low or the high still have not been breached, I would disqualify it and negate that trade just as well. Only because if that's the case, then the momentum in your favor isn't as strong as you initially thought. So again, with this system, you're going to find plenty of setups. You can afford to be very selective and very very choosy. Let me show you a couple of Forex pairs, okay? Oops. This is the British pound, US dollar. I had marked these earlier. Again, let me zoom out here so you can appreciate the slope. See, when you have that slope in place, okay, it's that momentum driving it forward, and that's really what's in your favor. That's half your battle won. So you can see the first setup here, okay, off this very strong move lower. Look at how sharp that drop is on the bars, almost vertical, okay? It pulls back only about 2 bars, and you get that reversal signal. And what happens? Boom, it collapses, moves in your favor immediately. You get another nice pullback. There's that reversal signal telling you that retracement is over and the trend is going to continue, and boom, it does. You get another one here, and off it goes. So there were actually 3 opportunities here to enter on this drop in crude oil. Now, with the with the exit strategy that we use, you'd actually be in this trade throughout, even from up here. But I'll touch on that a bit later as well. Let me show you another Forex pair, the Australian US dollar pair. Okay, same thing. What matters is that you have that slope or momentum in your favor. And when you get that pullback, as long as that slope in the 20 is still intact, you get that reversal signal and off it goes. Okay, that's how well it works. So let's run through a few more. This is the point in the presentation where I'm going to bring in our coaching coordinator, Raul, to help me with questions and symbols. So if you have a symbol you want me to pull up on the chart for us to analyze together so I can show you how this would have worked on that, please type it in now. I see a lot of questions, so I'm going to ask Raul to help me read some off while we look through some more charts and we can get some questions answered.
It's always a pleasure to be here. It's our first session with MetaStock, and I can't say enough about the classiness of the organization. They've been so good to us. Jeff and
Absolutely.
his team have been so wonderful to us getting us started on this. We do appreciate it. The first one is from Kelly. I'd like to know about the diamonds, DIA.
Sure. Let's have a look at DIA. Thanks for that. Oops. Let me try that again. Okay, here's a chart of DIA. Let's have a look. And what you want to do with this setup, when you do find a proper setup, is look to your left. Look back and see, look for other instances, for other setups on the same chart to see how well it would have worked. Because oftentimes you're going to find securities that work extremely well with it, and others where you don't get many setups. I can see one here, right in here. See that? Just to the left. Look at the slope on that moving average. Oh, I'm not sure what happened there, but there we go. There's that slope, and that's what's driving you forward. That momentum is like a wind at your back, propelling you forward. And you can see that as soon as it triggered us in, it continued moving higher. Okay, looking for others here. There was another one here, although the slope wasn't as dramatic, but you can see there was another engulfing pattern there, and it continued higher. Let's see if there's any others here. That might be about it for now. There was another one here, yes, recently, right here. Okay, so those are the diamonds.
Ian wants to know about ZTS.
ZTS. Let's try ZTS. Okay. So let me just check the, no, that was flat. Let's see. No, this one, this one, there weren't many opportunities in this one. I mean, there was one right in here, very small one, right in here, okay? And you can see that it did move the next 4 or 5 bars higher, although then would have quickly retraced and stopped you out. And that's going to happen. This isn't a flawless system that has no losers at all. You're not going to find such a system. But again, remember, your risk is limited to the range of that one candle. Okay?
Wang wanted to know about Transocean, RIG. This stock's
RIG,
been
yeah,
feeling the pain. It's down.
Yes.
I think it got cut down by about half.
Absolutely.
The last month or so.
And really, these are the kind of trends that you want to look for, right? This is what your watch list should consist of, because these are the ones that turn out to be the easiest winners. Let me just confirm that this is one here. Close 38.65. Yeah, there we go. So there's one right there. Right in here. I'll zoom in for you in a second. But look at that. Okay? Let me just zoom in for you. Okay? See, and we even lose part of the slope when I zoom in, but you can see here how significant that slope is, okay? And you get this minor pullback here, just 3-4 bars, and there's your bearish engulfing setup. You wait for a trade just below the low of that bar, gets you in, your stop goes just above the high of the bar, and look how how short that range is. So your risk here is so small compared to your potential reward. And this is a nice thing with the strategy is that when you look back at your trades for the year, your losses are so small compared to your winners. And and because of that other rule that we put in, that where most of the trades that don't work out are not even losers, you'll see just how dramatic the results are. And you can see this again moved in your favor immediately here. Okay, so there was another one right here. Okay, it won't take you long to learn how to spot these. Okay, I've been looking at charts for quite some time, but you know, just spend a week or two going through these charts and you'll pick this up so quickly. It's so easy to spot. But again, you can see just this one, even though it paused a few days, it just collapsed after that. And it's that momentum that's driving you lower.
Jerry's asking about one of your favorite biotech companies. Want to guess which one?
No.
Celgene.
Celgene, yes. I do like trading Celgene. It works out very well for me. Okay, so let me just span out here, get some more. Yeah, that's what I thought. I remember there was a setup here. So there's one right here. Okay, and again, worked out very nicely. More recently, there was one here. Now, you see, this is another question I get asked is, oops, sorry, wrong tool. Here, there's a setup, and you can see that it wasn't necessarily on a pullback. It had already advanced a few bars, okay? So I often get asked, well, if it's not, you don't get the reversal during the retracement or that bullish engulfing pattern, do you still take the trade? My answer to that always is, look at the range of that bar. If you're comfortable with the risk, yes, absolutely, you do. And again, this, you'd still be in this trade if you got in on Celgene back here around the 20th of November.
Jerry's asking if you can enlarge that area where you were just focusing.
Sure. Hope you can see that. It's these two bars here that I'm focusing on. Again, remember, for the setup, it's only the body of the candle, the bodies of the candles that matter, not the wicks, okay? But for the actual trigger, you need to trade above the absolute high of that candle. Okay?
Excellent. I know you've got to go shortly. We'll do one more and then I'll let you get back to your
Sure,
presentation.
perfect.
Martin's asking about KBR.
KBR. Let's have a look. Let me zoom back out so we can get some. Okay. You see, here's another one of those examples. I'll zoom back in for you. Again, this is one of those here, okay, that there's really no pullback. It's a one-day consolidation. But see, this is the kind of thing that you want to be careful with, especially when you're first starting out with the strategy. Let me zoom in for you here. You can see this here. Now, can any of you spot why you might not take this trade? Okay, there's a couple of things here. Look at the slope of the price bars, right? Beautiful. That's exactly what you want to see. The 20, not so much. It had gone flat and then just started rolling over again. So again, in this situation, if you're really comfortable with the risk level here, you can afford to take it. You can see how nicely it worked out anyway. But if not, you can be selective and wait for a much more dramatic slope on the 20, okay, before taking another entry. Because again, look at what happens a few bars later. There's another entry. This 2-bar pullback, and there's your reversal signal, and off it goes. Okay, so you can afford to be very picky and very selective with this strategy. Okay, okay. I'm just going to go back to my presentation here for a moment and recap what we've covered so far. What I've shown you today is a system that will work on any market. You've seen examples of stocks, futures, forex, okay? Any time frame, any price level. You saw how easy it is to set up on a chart. Again, it can be used as a standalone system on its own, as a strategy on its own, or a great complement to whatever you're trading with now. Also, one of the real benefits is that it tends to move in your favor immediately, okay, more often than not. And again, majority of the trades that don't work out are not actually losers. They're negated trades. Now, I see a long list of questions. I see also many people asking about the exit strategies and so on. I'd love to show you everything. Unfortunately, I would need a couple hours to do that. So I really can't do that, but we do have a class coming up where I teach the full system from beginning to end, including exits, coming up January 23rd. Sorry, still on 2014 here. It's actually 2015, 1 o'clock Eastern Standard Time. Due to the holidays, we've had to push this class back. Okay, the event will be recorded, so if that date doesn't work for you, you will certainly receive a recording. But what I will show you during that class, what I'm going to teach you in addition to the full system, is a very unique way of adding support and resistance to this setup that really increases the accuracy level. I'm also going to teach you 2 different Fibonacci tools that help you not only with the entry, but also with the exit. Okay? And in addition to the engulfing pattern, I'm going to show you 4 additional trade setups that you can use with the system, all of which work just as well on stocks, options, futures, and forex. Okay? It's based on the same principles, that trend and momentum in your favor. Then you get that pullback or that retracement. And it's at that point where, in addition to the engulfing pattern, you can apply these 4 additional trade setups. This will keep you very active in the markets, okay? And one of the best parts of the class is that the second half, we do a scan together. I show you how I look for trades. I'll share my watch list, and we'll do a search together for real-time trade setting up for that coming week so that we can all walk away from that class, not only knowing how to trade the system on our own, but with some real trades that we can put on right away, okay? To sign up for this class, just go to tradingwins.com/MO. That's short for momentum, MO. And what you're going to get when you sign up is a recording of the previous pro class. We didn't want you to have to sit and wait until January 23rd to get all this information. So we recorded the previous session, which was just last week. And it was just over 2 hours, and you're going to get a recording within a half hour of signing up for this, so you can watch it and start trading with this right away. We will also, though, reserve your seat at the live class in January, okay, and throw in a 30-day membership to our pro service. What our pro service includes is we record videos every evening from Sunday to Thursday each week where we talk about what happened in the markets that day, where we believe things are going next, and also review our open positions and highlight new trade ideas. Okay? Real benefit of it is the traders, myself and the other traders here at Trading Wins, use many different systems that we trade with, and we will highlight trades in those videos of all those systems. Okay? So you get the benefit of that. Now, altogether, it's $691 value. But for anyone on this webinar today, it's just $97, okay? Again, it's tradingwins.com/MO, M-O. And now we do have to limit the class, unfortunately, to 25 people, okay? What we really want to do is make sure that we answer every single one of your questions during that class so you can walk away and trade the system like a pro, okay? And for us to do that and keep that class within the two-hour time frame, we have to limit it to 25 people, okay? Again, during that class, I'm going to show you the full system, start to finish, including exits. I'm going to share 5 different exit strategies, but the one we use most often with this, I'm going to show you a very unique way to add support and resistance to really increase the accuracy of it. I'm going to show you the 2 Fibonacci tools and give you those 4 additional trade setups. And again, we'll be doing a live scan together for trades that we can all walk away with that week.
Somebody, sorry, I think Kelly had just put in that it's /MOP. It's not. Although we would like to mop up the market with all our profits. It is MO.
It is /MO. And actually, I'm going to take you to that page now just to show you that what you are going to see here is a title for the product of our favorite trade setup. This, as I mentioned earlier, is my favorite trade setup. And throughout the year, we have been holding classes on this, and that's why the page you go to will say our favorite trade setup of 2014. But it is the power momentum strategy that we've highlighted here today. Okay, again, it's just $97, and the link is tradingwins.com/MO.
So every year around June, July, you sort of start coming up with what's been working great, and you come up with your system of the year. Is that fair to say? This would be it?
Yes, absolutely. But I should say it's not something we just started using in 2014. We've been using this for many years through many different types of markets that we've seen, and it's been just as consistent throughout.
The 30-day pro service. Did you mention what happens at the end of those 30
No,
days?
actually, thanks for bringing that up. No. The pro service, if you're enjoying that pro service after the 30 days, you do nothing and it'll automatically renew at $97 a month. If for whatever reason you'd rather not renew, then just give us a call before the end of the 30 days and we'll cancel that for you.
Now, you've also started something new recently, or restarted something with your pro service, the trade alerts
Oh,
during
yes,
market hours.
absolutely. We will, whenever myself or the other traders here take a trade themselves, we will send out a trade alert for you so that you can follow along. It's a way for you to sort of look over our shoulders and see exactly what we're doing. Okay?
How much of the discussion during the pro class is on options and how to use this strategy with options?
We do spend some time showing you how to trade this with options. Really the focus is on the system. So what we're going to cover option-wise is I'm going to tell you what kind of expiration you should be looking for, what kind of delta you should be looking for, maybe highlight where you would buy a straight call or put or put on a credit spread, that sort of thing. What we won't do for options during that class is get into the complicated option strategies such as butterfly spreads or iron condors. We just won't have the time for that.
Now, you're working actively with Jeff and his team at MetaStock to try to automate the system so that the scan can be done automatically. Is that correct?
Yeah, absolutely. And Jeff's been great. Again, thanks for all your patience and all your efforts in putting that together. And one thing that I do want to mention is that if you buy this class, once the indicator is ready, and you want to purchase it, you can use or put the cost of this class towards that purchase. Okay, so we'll discount the purchase of the indicator by the cost of this class. Again, it's tradingwins.com/MO.
If somebody wants to purchase now but doesn't want the pro subscription to start now, can they choose to have it start at a later date?
Yes, you absolutely can. Once you make your purchase, just send us an email at info@tradingwins.com. Let us know which date you would like it to begin, and our staff will make that adjustment on your account.
We do have a phone number as well. You can reach us live at 1-888-574-2426, 1-888-574-2426. We're on live chat as well if you have any questions about ordering or any questions about the product. It's tradingwins.com/MO, Mo for momentum. The class will be on the 23rd of January 2015, 1 o'clock to 3 o'clock. It will be recorded. If for whatever reason you can't attend, but you do want the class, the recording will be available to you, and it will be available to you not just as long as you're a member, but it will be available to you indefinitely. You can go back and watch it over and over as many times as you'd like. How quickly will the old class be sent out to them?
About 30 minutes after you sign up, you will receive the copy of the old class, and it's not old at all. It's just a week ago. But another reason why we do that is we want you to watch it, make a note of any questions you have, and bring those questions to the class. In this instance, since the class is not until January 23rd, if you're watching those videos that video, and you have questions, email us at info@tradingwins.com, and we'll do our best to answer it for you.
And you said it does not look awkward at all to have your iPad at the dinner table at Christmas dinner
No.
to be watching watching the Power Momentum system.
That's right.
While everyone's having their dinner.
Exactly.
Okay. Kelly, thank you so much for putting that phone number in there. Vince, can we do a few more symbols? We had some of our members who couldn't attend today send us some stuff by email, so I'm just going to read those out to you.
Okay, let me just switch back to my charts here. Okay.
Terrence wanted to know about the US dollar Japanese yen. I know that has been a hot button for you.
JPY. Okay. So here, right here, okay, and this is a great example. You can see that we had started to get that slope higher, right? And this is why, another reason why I want you to measure it on the price bars too. Sometimes it's more dramatic on the price bars. Now, let me zoom in and show you something here. It's a great example, okay? You see how we get 3 straight days of upside, then we get consolidation. It's not always a retracement, but sometimes it's a consolidation sideways, okay? See that? And then we get our bullish engulfing pattern. Okay? Wait for a trade above the high. Once we get it, go long, put our stop just below the low, and off it goes, okay? So you can see how well that works. Now, in an instance such as this, here, okay, even though it would have, sorry, drew it wrong. Let me just clear that off and redo that. Even though the trade worked out extremely well here, okay, you can see that at the time of this setup, look at the slope of the 20-period moving average, right? It was going against you. So you don't want to take these trades, okay? You don't want to gamble on that. Now, very low risk, of course, but you want to be patient and take the best of the best setups. Any other symbols?
Yes. Let me just go through the emails again. George was asking about Apple, along with a lot of other people.
Sure. Let's have a look at Apple.
This, would you say, by far is the most popular symbol that you get asked about?
Yeah, and all the time. Absolutely. This one is huge. And again, look at this move here on Apple. This is why I want you to measure it on the price bars. Very sharp move higher. I'm even going to zoom in a little for you. There you go. And now what do we see this? Similar to the other example. More of a consolidation sideways, right? Than a pullback. But what do we see at the end of that consolidation? We see a valid bullish engulfing setup, which tells us this consolidation is over and that the up move is going to continue. And off it went. And that was a beautiful move from a high there of 109.75. It went as high as 119.07. Now, again, none of us have a crystal ball. We don't know where the exact top of that move is going to be. But during the class, I will show you an exit strategy that you can use that will help you capture the majority of the move.
It's just after 4 Pacific now. Time for 2 more? I know you've got to wrap up.
Sure.
We'll do one. We'll do fossil first.
Okay. Fossil here. Let's have a look. Oops. Sorry, let me try that again. Oh. Maybe I'm entering it wrong. .o. There we go. Let me zoom out. Okay, so let's have a quick look. There was one back in here on fossil, and I'll zoom in for you.
You identified trade alert here recently and closed out a position, did you not?
Yes, we had a real nice winner on fossil recently, and that was in this area here. Okay, now this was using a slightly different trading system, but this is one of the trades we highlighted in our nightly videos. And the entry was, let me zoom in for you. The entry was actually off the high of this bar here. And we exited out in this area here. And then waiting for additional setups here. So let me look back. There was this setup here. Now this one you can see here in this area, this actually would have stopped you out. Okay, that's what I mean. They're not all going to be winners. Right? See this one right here, waiting for a break below the low, which we got the very next day, but the day after it went against us and moved above the high of the engulfing bar. It would have stopped you out. But again, the range of that bar there, from high to low, was just over $1, about $1.20. Okay, that would have been your loss there.
I got to tell you a funny story about one of our members.
Okay.
A couple months ago, he was using your one of your other systems. I think it was 3 Simple Steps to Profit. He called into the office and said to one of the reps, "I'm getting a bullish signal on Costco." And of course, the rep said, "Yeah, okay, you know what." Anyway, he's calling it. He sent a message in today to Gloat to say, "Can you take a look at Costco?"
Costco, sure. Let's have a look at Costco. All right. So, well, I mean, there's been some really nice trades on Costco, and again, I'll zoom in a moment. There's one right there. Let me zoom in for you. Hopefully you can see that. Not sure what this is here. Let me delete that. There we go. There's your bullish engulfing setup. Okay. Now we lost the slope on that when I zoomed in, but the slope was absolutely intact there. And this is the other thing you want to look for. You see today's candle? Okay, when you're just starting out, it might be easy to mistake this and think, oh, we got an engulfing pattern there. But look at this bar. It's a wrong color, right? This is a bearish color. It closed near its lows. It's supposed to close near its highs for a bullish engulfing pattern. Okay, remember that. But yeah, that's Costco.
Vince, I know you have another engagement that just in about an hour or so. So we're going to wrap this up and let you go.
Okay.
Any final words about the session, the people that are planning on using it for their trading in the next week or so, and how they can join the class?
Yeah. Again, the link for the class is tradingwins.com/mo. Okay. Going to show you the full system from start to finish. I'm going to show you a unique way to add support resistance, the Fibonacci tools, the 4 additional trade setups, and we're going to look for real-time trades setting up together. The class is Friday, January 23rd, 1 p.m. Eastern, and that event will be recorded as well. As soon as you sign up, 30 minutes later, you'll get a copy of the previous class, and regardless of that, you'll also get a recording of the live class. Thank you all for taking your time to be with us today. I hope you got some value out of it. And before we go, I do want to thank Jeff and everyone else at MetaStock for having us on and working with us to help us program the indicator. Really do appreciate it. And I really hope you can join us at the class. Remember, it's just, unfortunately, we have to limit it to 25 people. But the link is tradingwins.com/mo.
For the folks that have ordered already, thank you so much. We're looking forward to seeing you on the 23rd. When you do get the email from us, the first one will be to confirm your email address. Please do so that we can send you the recording as well as your nightly market updates and trade alerts. I also want to say thanks to Jeff, to Kelly for all of your help today. We really do appreciate it and are super excited about the future possibilities with MetaStock and Vince's systems. Vince, thank you again. Jeff, we'll send it back to you.
Okay, well, this is my last official seminar before the holidays, so I hope you guys have a great holiday season. Let me know if you have any questions. You guys know how to get a hold of me. I know a lot of you like the class. For me, I'm always looking for stuff that I can easily understand, that's visual and that works well. I think that's why Vince and I get along so well. So we're looking forward to 2015 and doing some more classes and more work together. But thanks for coming out to the class, and we'll see you next year, guys.